Hello and welcome back to Bonex Investment Group. In this video, I'm going to give you a simple strategy which provides one simple setup that you can trade and make a living trading off. Alright, so basically without wasting much of your time, this is what you're going to learn in this particular video. Firstly, I'm going to teach you how to determine bias, how to find the direction of the market, and how to actually anticipate what you're going to do, a buy or a sell. Then I'm also going to provide you a market maker template as well as explain it so that when you are taking trades, you understand exactly what I would have discussed in this particular video. Then I'm going to go in depth on the Traders Dynamic Index, which is one of the most favorite trading indicators for traders. Then the one simple pattern strategy. This is the ultimate goal of everything that we have discussed, and this is how you are going to start trading this one simple pattern right away. So make sure to stick up to this particular point where I will actually delve right on the charts so that you can see the examples of how we trade this particular strategy. All right, first is market bias determination. What is market bias? It is defined as the direction of flow. Is the market going to the upside or is the market going to the downside? That is basically what market bias means. So understanding market bias allows us to understand what kind of setups to look for, whether we are going to be looking for buys or sells on a particular day, or we are going to stay out of the market for that particular day. It is something that comes out of the market bias. So we derive market bias or market direction from the previous day flow as shown in the picture. So here we can see there are these days, day 1, day 2, and day 3. If we are on this particular day, we want to anticipate before this day moves. We want to know whether we are going to buy or sell. So this is actually derived from this particular day where we actually check the low, the high, and the closing price to see if price actually made a rise or to see if the market actually made a day of rise. So if the market made a day of rise on this particular day, on the following day, we expect the market to make another day of rise. And if it made a day of rise here, we would also expect another day of rise on this particular next day. Basically like that. So that is how we determine market bias and how we determine the market direction for any particular day. If we are on Tuesday, we can actually check whether Monday was actually a day of rise, or we can, if we are on Wednesday, we can check if Tuesday was actually a day of rise. If that is so, we can actually use that bias on that particular day. All right, so this is the market template, and the market maker template helps us to view the important parameters of a flow of the price section. So we are able to see the Asian session range, which is this one in light blue. This is the Asian session range, and after that Asian session range, we can see this is the high in yellow, and this is also the low in yellow. So within that high and low, we have these session changeover periods, which are basically periods whereby we are shifting from one session into another, and this one as well. So in this particular session, this is the London session, and this is the start of the US session, and this is the Asian session. So Asian session high and low is also viewed on the market maker template, and can also pinpoint the start of the session. And this will be highly important in the strategy that I'm going to give you. Why? Because it is going to let you know or let you see the Asian session range as well as points of entries which are within the London session. So download this template for free in the free Telegram channel that I've left in the description box below. Right, so adding on to the market maker template, we have what we call the Traders Dynamic Index, which is a powerful tool for entry confirmations for our strategy. So within this particular indicator, all that we want is to see the market actually give us an RSI line overshoot outside the volatility bands. These blue lines are volatility bands. The yellow one is the moving 50. The red one is an EMA or the signal line, and the green one is the most important, which is the RSI line. So the RSI line, when the RSI line goes outside the bands, we call it a shark fin. For those who actually follow this channel for quite a long period of time, you know that I talk about the TDI a lot, and you have an idea of how to actually use this particular indicator. But for those who are new, consider subscribing and understand this TDI. All right, so within our strategy, what we are going to require is we are going to require this coupled with what I've shown you earlier. So let's now try to couple everything so that it becomes a one system that can be followed easily. And after that, we'll go on the charts for examples. All right, so I'll give you steps so that you can follow them easily. These steps are executed on the M15 time frame. I come across a lot of people in the comment section who would ask, is this on the M15 time frame? Or this is H1? Can I try to stick to the manual of any trading strategy? Because that is where it has been tested, and that is where you actually get optimum results. So step one is basically to anticipate the direction of your current day using the previous daily flow, right? We are saying if Tuesday was actually a rise, we expect Wednesday to be a rise as well, right? Within that expectation to be a rise as well, we are saying this on Wednesday, we are expecting to get buys, right? On the market maker template, wait for a stop hand, then, right? So we are saying Asian session is the governing session, whereby we are expecting the Asian session to range and then give us a stop hand right below the Asian session. But this stop hand must only be in the London session, and then we wait to see the market to go in the upside if the previous day was an uptrend day. So see a shark fin on the TDI. This is possibly the end of the stop hand. How do we know that the stop hand is ended? We can actually do so by seeing or observing a shark fin on the Traders Dynamic Index. Then, as always, calculate your risk exposure and end the market. Right? I know that this is not something that is making sense on these particular slides. We can now jump right over the charts so that you will be able to comprehend everything clearly. But before we jump over the charts, check out our free Telegram channel via the link in the description. I'll leave the link right at the top so that you can be part of this purely educational channel. Let's jump right over the charts. Examples. All right, so this is USA 100. Some other brokers would actually name it US 100. Some other will actually name it NASDAQ or NAS 100. It differs with the platform that you are trading from. All right, so basically this is the M15 time frame, and the first thing that I'm going to show you is basically to see what a day of rise or a day of drop is. So in this particular case, this was the 22nd of April, and on the 22nd of April, we can see the opening and the closing price shows that this was an uptrend day, meaning that on the 23rd, we were expecting buys, which is since this was an uptrend day. But unfortunately, on this particular 23rd of April 2025, there was no stop hand, a clear stop hand below the Asian session, as I've actually laid the rule on the slides. So on the 24th, we can see this was also a day of rise. Then on the 24th, we can see that the market actually consolidated in Asia. Session changeover box was issued, and then we can see that there was a move below the Asian session range. And that move below the Asian session range confluenced with a TDI like that. And that TDI was actually a point to actually tell us that the market has completed its stop hand. So if the market has completed its stop hand, we are ready and good to go. and the market went our direction like that. So this 24th day of April 2025 was actually a day of rise. So the 25th, we were expecting as well to get another day of rise. So we can see that there was also consolidation, and then the market went right below the Asian session range, showing that there was a clear stop hand within the London session, and there was also a coinciding shark fin right at the on the TDI like that. And this was actually our confirmation that we are about to go to the upside, and the market went right to the upside like that. So the following day, of course, this was a day of rise. The following day did not issue our arrangement of price action within the London session, and we've said this strategy or this pattern is highly accurate when traded within the London session. Although it occurred in the US session, we were not going to be convinced to take that particular trade. Let us be very difficult to be convinced by the market so that we remain consistent. Consistency beats any kind of skill. All right, so basically that is all that I wanted to share with you within this particular video. One pattern to give you a living. If you are very good in executing all the rules that I've provided you, you'd find that you will definitely see a positive equity growth over a series of trades. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.